Good morning, everyone. Thank you very much for being here. I'm Boriana Farrar. I'm a vice president and a business development director for North American at the American Club. And I have and thank you very much for being here this morning. Today, let me briefly introduce my panelists. We have Ted Dimitry from Alliant Insurance Services, who flew all the way from Houston, and he's a vice president and in one of the leading brokerage firms, Alliant Insurance Services, and he's a specialist in marine and energy, and he's been in the industry working for major insurance brokerage firms for more than 20 years. We also have Joe Hughes, who is a man who does not need introduction, and I have I'm very fortunate to be working with him at Shipowners Claims Bureau, which is the managing company of the American Club. And he's the CEO and chairman, where he has served as a CEO and chairman for more than 20 years, and he has more than 40 years of experience in the insurance industry, working at other major P&I clubs and also brokerage firms. In addition to his role as a CEO and chairman at the American Club, he also oversees Eagle Ocean American affiliate, which operates, we call it EOM and EUA facilities, and he also serves on the board of American Hellenic Hull Insurance Company, which is a subsidiary of the American Club and which now provides hull services. In addition to everything he's doing in connection with the American Club, he's a chairman of NMEPA, and he's also involved in numerous other organizations which you all have seen him as an esteemed participant and speaker. We also have here today Chris Maro, who is at JOT Specialties, and also he's in charge of business development of North America. And he's has more than 11 years of experience in the insurance industry, operating as a broker also in major insurance brokerage firms. He's worked in the brown water and blue water sector, and currently he's focusing on the blue water sector, and brings a wealth of experience with him. He's also graduate of the Maritime College. He's been served on ships, and we are looking forward to his comments today. And last but not least, we have John Raggio, who is one of the founding partners of Sealift Inc., a U.S. shipowner, U.S. shipowning company, which we are very fortunate to have as a member, and they're split their fleet between us and our friends at the London Club. He will bring here the shipowner's perspective, and he has a wealth of experience for more than 20 years, also as a shipbroker and now as an owner. So with that, I want to start with the first question. We will be discussing several hot topics, and I want to start with Brexit, which has been discussed in the industry for several years. And my first question to our panel is, what is your opinion of Brexit, and how do you think it affected our industry? Ted.
Well, my opinion of Brexit is that, I think it caught a lot of people off guard, but it's sort of, the British people made a statement, and, it was very, it was close to 50-50, so it was a narrowly passed measure. Kind of remains to be seen how that will be implemented. I think from a transatlantic standpoint, from an American perspective, at least an American working on the Gulf Coast, I don't want to say it's a non-event, but it's not really impacting my business or my client's business all that much. I think Lloyd's of London and other independent British insurers they have enough time and they have the will to set up shop in Brussels and maybe even other member states of the EU in order to offset any trade issues that may come up. And I think they're looking at it proactively and very, very seriously. I think it's more of a UK-EU issue from a practical standpoint, but I think they'll take it in stride, and I think eventually it'll sort itself out.
Thank you. And I'm very curious to hear the opinion of Joe Hughes, who is also a British national. Actually, he's...
Yes, I am. I'm a dual national, actually, as Boriana quite correctly states. You made a very good introduction, Boriana, but your reference to my more than 40 years in the industry means, alas, that I can no longer lie about my age, which is, a bit of a downside. Nonetheless, what do I think about Brexit? Well, I could keep you here all day, quite frankly, because, I think there are several dimensions to it, more than several dimensions to it. I mean, it's first of all, I think as a political statement, it's an absolute disaster for the United Kingdom. I think that it represents an enormous failure of the political classes in Great Britain, frankly, and I think that all the supposed advantages of trying to turn an island of 63 million people into some kind of offshore Singapore, able to exist, with that degree of independence and so on of the major markets surrounding it, I think is complete nonsense, to be perfectly honest, and I think that Britain would have been much better served as a voice at the table seeking reform of the European Union rather than just divorcing themselves entirely from it. From the insurance perspective, as Ted said, Lloyd's are making arrangements to set up shop effectively in Brussels. I had lunch, as did Boriana actually, she was there too, about 2 months ago with Inga Beale, who is the CEO of Lloyd's, and we were talking to her about this, and basically what the plan is to have two slips effectively. For business coming straight into Lloyd's of Brussels, it's European business, it will be written directly. For business that is non-European, that will be done as a reinsurance effectively through the Brussels office. That may or may not work effectively. I mean, there's bound to be some degree of knock-on effect, I think, of the way in which the establishment there operates. One can only hope for the best, but I can't believe that it is necessarily going to be as easy as maintaining the status quo going forward. So far as London is concerned as a shipping centre in general, I think that it will be difficult, although you could say shipping is the ultimate international business and that, where you happen to be based is really irrelevant from the point of view of your international outreach. But I think that not being seen to be passported, not being seen to be part of the larger market in that sense, probably will inure to the detriment of London as a shipping centre. However, look on the bright side. I'm a member of the board of NIMAR. NIMAR promotes the interests of New York as a maritime centre, as a maritime cluster. So this may be a great opportunity for New York to take up some of the slack that I suggest might be created by Britain and London in particular as a centre, leaving the European Union. So from our point of view here in this city, it could be a good thing, actually. It might actually stimulate some further growth in the ancillary services that we offer, perhaps in the insurance side as well, for the global shipping community. But from the British perspective, per se, I don't think it's a good thing at all.
Thank you very much, Joe. Chris?
Yeah, I think from the large company perspective, it depends on how large your footprint is over in Britain. And those without a larger footprint I believe will struggle to sort of abide by the requirements of Brexit. Being part of a large international brokerage firm, we already have establishments outside of Britain. So for us, not necessarily, it won't be a struggle because we have operations up in Brussels, Ireland, Sweden, Netherlands. So we can manage sort of the expectations of what Brexit calls for over the next months, so to speak. But I think the real test, what you're going to see in these sorts of companies, sort of the middle market and smaller markets, how do we abide by that? Is this going to be sort of a play on volatility on our side to compete in the market and be able to sort of withstand sort of this storm that has been created in the company sector?
Thank you very much, Chris. And John, what is the owner's perspective? And I know your ships operate in the U.S. and internationally.
From an owner's perspective, it doesn't matter too much. But from an insurance perspective, and being on a committee member of a P&I club, these UK regulated clubs are taking this very serious. They're looking at setting up satellite offices in different countries in order to service the EU community. Certain countries have been mentioned, Luxembourg, Malta, Cyprus, among many. But I think it's going to be a herd instinct at the end of the day where the larger P&I, London P&I country will set the stage on where they're going to be domiciled and set up the satellite officers. Maybe they'll all join Joe here in America. Who knows?
I'd like to comment on that.
But
yes,
as the last point, yes, it is something. No matter where Brexit goes, it's being looked at, and I think time will tell. It is work in progress.
Thank you.
Actually, yes, that's very interesting you say that, John. Actually, I think that the St. George's Society of New York is about to have a large influx of new members, potentially, over the next couple of years. But actually, you raise an interesting point in regard to the future in that context, because, and I don't know precisely what the details are, and I'm aware of this only in very general terms, there has been an arrangement reached between the NAIC, the National Association of Insurance Commissioners, which is the overarching governing body of the state insurance regulators across the United States, and the European Commission in regard to mutual recognition of each other's solvency rules. And I'm not quite sure what the detail of that, and I think there's some further steps that need to be taken. As I say, I'm not quite sure of the detail in regard to that, but that might mean potentially that a US domiciled insurer, subject to the regulation of the NAIC, might have a much greater I mean, this is all sort of counterintuitive, but it might have a much greater freedom of operation within the reformed European Union, excluding Britain, than a British insurance company might have post-Brexit, which is a very interesting possibility. And it would be therefore very interesting were the regulations to come to that sort of fulfillment, that yes, you might have management companies setting up here if they want to deal with their European members from New York rather than from London. It's extraordinarily, as I say, counterintuitive, but that might be the practical result of that development.
Very interesting. Thank you.
Just one more
Yes.
comment.
Yeah.
In the UK, the regulations have gotten really out of control.
Yes.
And I don't know, Joe's not faced with it, but at these committee meetings, we must spend close to half the time talking about the different regulations and how to meet them. And I personally getting a little fed up with what's going on.
Well, I think, again, John, that's absolutely right. The American Club made an investment in a Cypriot-based insurance company called American Hellenic Hull. It did so in the middle of last year. It's been very successful. I'm on the board of that company, and we have our board meetings every quarter, mainly in Cyprus, as you might imagine. But Cyprus, being a European Union state, as of course Britain is at the moment, is subject to the Solvency II regime. And Solvency II is very, very demanding. I mean, excessively so, quite honestly, because you seem to be spending most of your time, rather than doing the business in which you should legitimately be involved, writing reports to the regulator about your own risk solvency assessments every 2 minutes, and amendments to your business plan, and reporting this and reporting that. And it is incredibly burdensome, and you wonder to what real purpose, quite frankly. Admittedly, the regulator here in New York is no pushover, nor should any regulator be a pushover, but I think it's fair to say that the risk-based capital requirements here in New York are essentially more sensible. They're not easy, but they're more sensible than some of the more extravagant elements of Solvency II.
Thank you very much. And I would like to transition to our next topic, which is pricing, which everyone is excited about. And I would like each of you to comment on pricing when it concerns insurance rates. And we're following two trends, the freight market and, of course, the oil prices. And how do you think that's related to insurance pricing?
Well, I think one of the situations that is keenly impacting my sector of the business along the Gulf Coast is not just the impact of Hurricane Harvey, which hit the city where I live, but also the hurricanes Irma and Maria. And from what I've seen so far, there haven't been significant maritime insurance events. There have been a few claims, a few incidents. Of course, I'm not minimizing those, but from a macro standpoint, those maritime events haven't been the sort of impacts that maybe Katrina and Rita had and Ivan before them in the mid-2000s. However, they are significant events. Harvey, the latest statistics that I read from Air Worldwide were that Harvey's impact is somewhere between 15 and 25 billion. Irma, somewhere between 30 and 50 billion. Maria, surprisingly, somewhere between 45 and 85 billion. So that's a combined total of insured losses of 130 to 160 billion dollars. The first two hurricanes might not have been enough to move the needle, but I think Maria definitely did, and followed by, or occurring concurrently with some major earthquakes in Mexico, especially the aftershock in Mexico City. Granted, these are not maritime losses, these are not offshore energy losses, but they're going to have an impact, and it's going to reverberate around the global insurance industry, and it's going to really come into sharper focus, I think, in the first quarter of next year when the reinsurance treaties, for the most part, renew. And there's some reinsurers that are already drawing lines in the sand, Munich Re being a standout, some others that are taking more of a wait-and-see approach, but we're going to be looking at maybe a 2 to 3 year hard market in the insurance cycle across all lines of business.
Thank you very much. Joe?
Well, that's very interesting, actually, and I think as an insurer, it would be, I mean, except to the extent that this applies to reinsurance, it would be a good thing if there were a hardening of the market, quite honestly. I think all who know our business will recognize that the hull market in particular has been soft. I almost want to say since time immemorial, but certainly over the last 15 or 20 years, there have only been a couple of years in that period where there's been any recognizable sort of hardening in the market. However, claims have been relatively benign over that period on the hull side also. And of course, the real issue is just the huge amount of capacity that has been available to absorb those exposures, or theoretical exposures at least, seeking yield effectively, money seeking yield, investors seeking yield by going into insurance investments rather than others. And that has had a depressing effect on hull. P&I is rather similar, not quite as extreme perhaps over the years. Again, there's been a P&I cycle of claims that's been relatively benign, both in relation to retained claims, smaller claims that individual clubs absorb for their own account, and also for the very largest claims within the group pool. The Costa Concordia notwithstanding, I was talking a little earlier this morning about the Costa Concordia, that didn't move the dial much, despite a lot of concern originally when it reached the heady heights of $1.5 billion in terms of total losses, because there was a lot of capacity to go into the market to absorb that. And in the reinsurance area, so far as the international group is concerned, over the last 3 years, notwithstanding the Costa Concordia, notwithstanding the Reina in particular, which are the two largest claims in that particular year, the group has saved its ship owner members $100 million in reinsurance costs over that period. So, there's still plenty of capacity there, and that's had a knock-on effect on all rates. And, from the point of view of absorbed claims in the P&I world, again, there's a relatively low rates. It would be nice if that changed, because I think ultimately, as Ted has just said, if there is less capacity around because the losses are no longer sustainable for the investors and they remove themselves from the market and rates go up, that'll, I think, be good for the health of the market in a more sustainable sense over time. So I think from everybody's point of view, if rates do go up at least a bit, that will be for the common good.
I think what Ted's point was on sort of it's going to come down to sort of the reinsurance markets. I think that's where it's going to ultimately begin with, is you're going to see this sort of trickle-down effect once this sort of wind season dies down and the losses are sort of presented to the market, and see where we ultimately pan out. I mean, we're talking about hundreds of billions of dollars already estimated, and that's really sort of the key driver. I mean, it drives the commercial market, it drives, as Joe said, the international group of P&I market. So once you start seeing that fall off of potential reinsurers, and Ted pointed out, Munich Re has already come out and sort of given their sort of warnings. Hanover Re came out recently, also did the same thing. And you're dealing with sort of what I think is going to be sort of a knock-on effect of rating. I think also we're at sort of this leveling off period. I don't necessarily say that we're continuing in sort of a soft cycle. I think you're starting to see sort of markets take a harder stance, whether they're going to continue to write the business or they're not. I don't necessarily see them digging their heels in and sort of flipping the light switch and turning the rates off overnight. I think that it's more sort of, we're either in this for the foreseeable future and we're going to ride the storm out, or we're going to sort of make our exit strategy. And that's sort of where you see a leveling off in the market. And I think that that's most likely going to be the next 6 to 12 months in sort of that commercial market. Joe's absolutely right. The claims activity is sort of benign at the moment, so you're not seeing sort of the trending that we saw, almost 10 years ago when sort of the freight market was at its sort of all-time high. So that sort of activity and claims volatility isn't present at the moment. You're seeing sort of more sort of larger claims come in as opposed to sort of the attritional sort of smaller claims come in. So it's that whole sort of bucket of, is the reinsurance market going to dictate the next 6 to 12 months? And that's when you're going to see sort of a transition in the rating model. Again, I don't see it as sort of something that's going to go from soft to hard. I see this sort of leveling off, and sort of you're going to see the stronger survive as opposed to sort of these newer markets try to come in to dictate terms.
Thank you. John?
Well, from an owner's perspective, the present pricing in the insurance market is good. There is a lot of competition. If you're an owner with a good record and you're going to bring in new tonnage into the market, you're going to get very competitive pricing. One of the things I believe is that the P&I clubs are really mispricing new buildings, very, very low premiums. And Joe can tell you probably from his experience at some point, they're just too darn low. And this trend will continue, I believe, because of your overcapacity. So right now, I think a good business model is to have at least 2 P&I clubs or that you deal with, because again, if you bring in new tonnage with a good record, you're going to be in a very nice position for getting good rates.
Thank you. And now transition now to our last topic, which is a very hot topic right now, and that's cyber risk. There's been a lot of discussion as to the increased risk in this space, and we've seen a lot of publication and actually a lot of developments in the legislative arena, IMO, and also on the local Coast Guard regulation in terms of proposals. But I would like to pose the question to our panel here. Ted, how do you view cyber risk in terms of development and future insurance products and inquiries from your clients?
Well, it's something that a lot of our clients and prospects inquire about, but it's hard to define. Everyone knows what a cyber incident is, but it tends to be, right now, Joe Main Street is going to think of it as sort of a Target or an Equifax hacking event. And really those are notable, but they're sort of the anomalies in the cyber market as a whole. They tend to be very high frequency, low severity events, primarily ransomware, people hacking into systems and grabbing data. And then they hold it for ransom. One of the General Average surveyors that we have a relationship with had their entire London office data seized and ransomed off, and they had to pay for it, and it was an insured event, and it was notable, but it wasn't the sort of, paradigm-shifting thing that I think we're all afraid of. I think that the insurance market has responded. I think it's responded well, but there's no standardization, and that's not necessarily a bad thing. We're dealing with a new frontier here, but what is a cyber event? Is it a hacker coming in and ransoming off data? Yes, but is it a system glitch? Is it a satellite malfunctioning and sending a ship off in another direction? Is it automated systems? Is it someone, cyber terrorism, someone coming in and hacking a drilling rig or a drill ship and trying to cause a blowout? It's hard to define. I mean, a lot of those things are included, a lot of them are not. The wordings are vague, not necessarily specific. We're seeing, obviously, some, as was just mentioned, some regulatory enforcements on the rise. In the U.S., it's mostly from a consumer protection and HIPAA compliance standpoint, but the EU is putting forward something called the General Data Protection Regulation, GDPR, which the U.S. regulators are looking at closely. So I think what's going to happen is it was adopted in May of 2016. It's going to be implemented in May of next year due to the 2-year EU transitionary period. And I think the entire world's watching that closely, and we may see some standardization out of that, but it's still a very new frontier. It's a new product, and pricing is aggressive for it.
That's a very good comment, and actually there is a lot of noise in the industry about the implementation of this Data Protection Act in Europe, especially in the cruise industry, because the implementation period is very short. As a recovering lawyer, I'm very tempted to comment on regulations. So, Joe, would you comment, please, on cyber risk developments from a P&I perspective?
Well, I think what Ted just said about this being the new frontier from a marine insurance perspective is certainly the case. I mean, people were aware of cyber risk in the marine domain, I think, in a fairly not engaged way, if you could put it, until relatively recently. It's certainly a subject that has risen considerably in importance in the collective consciousness of the marine insurance community. And in some respects, again, as Ted says, the insurance response to it is somewhat nebulous. From a P&I club's point of view, if there is a cyber incident that arises from a non-war event, in other words, it's not a war or terrorism risk, or caused by a war or terrorism risk, then it is in the ordinary way covered as a regular P&I exposure. In other words, there's no specific exclusion in regard to cyber risk per se. If it were in the context of terrorism or war, then it would fall under the war and terrorist exclusion in any event. And in those circumstances, it wouldn't be recoverable from reinsurers, because many of you, or some of you, may have heard of a clause that's commonly used at Lloyd's called CL380. That is a cyber and biochem actually, but cyber mainly, exclusion. If you are a hull underwriter and you have CL380 on your cover, then, and Chris can probably correct me if I'm wrong in saying this, that would prevent a claim arising out of a cyber risk where someone was acting with an intent to cause harm, but not necessarily as a war, an act of war, or as an act of terrorism. Supposing, for example, a vessel is in dry dock, she's undergoing changes to her ECDIS, or there's somebody who's come in from a technology company, or perhaps in regard to the IT dimensions of the ship's engines, being a very modern ship, say, and that individual makes mistakes in regard to resetting it all and rebooting the system. The vessel leaves the dry dock, goes out to sea, and runs aground because the engine has failed or the actors has failed or what have you. That, even if the person were acting maliciously, would still be a P&I covered claim in the ordinary way. So if the person who was rebooting the system just made a mistake, that would be covered by P&I, and I suggest it would be covered by Hull as well. However, if that person thought, I want to be malicious today, I'm not doing this for any political purpose or for the purpose of terrorism, but I just feel nasty, I want to get back at my employers perhaps. In those circumstances, it might not be covered by Hull underwriters because it was done with an intent to cause harm. If there were a Hull cover that included CL 380, which is a fairly standard form that's applied to Hull covers, but it would still be covered by a P&I club. If it were an act of terrorism, it would be covered by neither.
Yeah, we tend to be sort of a reactive market and sort of industry and sort of waiting to see events unfold and how this could affect me and sort of put all the information in front of me and then, okay, let's talk about cost and then we'll make a decision about where we go. And I think in this sort of demographic of cyber and what is it, it's still an unknown. Everybody knows that there's an exposure, whether you're an operator, a broker, an insurance company, what have you. But I believe that the exposure is so real and we're becoming more and more knowledgeable about it, and just because of sort of the events that have unfolded over the past 12 months, whether inside or out of Marine, the Maersk attack was sort of something that spoke volumes and resonated to everybody insofar as the realization of what could potentially occur from a business standpoint and the loss of income to get yourself back up and running. To smaller ship owner operators, that event wouldn't necessarily affect you and sort of your loss. But I guess sort of the real exposure to an owner of today's world is, you take, for example, the GPS jamming in the Black Sea a couple weeks ago. And to Joe's point, if it was a hostile act of Russia to jam the GPS or the ACTIS, the ship runs aground, and you have in your hull machinery policy this clause 380 cyber exclusion that virtually says if it's due to a malicious act, terrorist war event, you essentially have no cover, then you don't have the coverage afforded to you for hull for physical damage. P&I does not respond for wreck removal, getting correspondence, salvage. There is no GA assistance, so you are virtually left, so to speak, on the hook. And that's sort of the real concern in today's market is how do you mitigate that loss and what's the cost associated with it? Because that is any one operator's largest exposure right there. So, and you're seeing that more and more. And then the question becomes, okay, was it a malicious act? Was it a terrorist event? Was it a warlike peril that you suffered? Okay, and then now prove your loss. So that's sort of the intent. The market, though, has sort of begun to offer the buyback of this exclusion, because the reality is that exclusion you're finding in the majority of the hull policies. And everybody's insurance intermediary and insurance company should be sort of expressing this to the operators of the world, because that is today's greatest exposure. If you go back to sort of the piracy events of 2007 and 8, it's sort of the same thing. Nobody really sort of understood what was going on. Do I buy a piracy policy? What am I getting for it? How does it work? How is it triggered? And then you sort the effects unfold with American flag vessels, and then it was sort of that reactive moment where everybody said, okay, this is something that we need to address immediately. So far as the standardizations in the industry, I think IMO, BIMCO, and Intertanko have done sort of a really good job about the guidelines of shipboard operators to implement sort of a safety management practice in the industry. And what we're seeing from our owners and operators is that they are implementing these standardizations across their companies. And not necessarily that they're looking to sort of buy bespoke cyber policies, but what they're doing is they're trying to mitigate the loss and see where the risk to their company lies, and if there is that sort of kink in the chain, that they have sort of that knock-on effect where they could be exposed, whether it's from a phishing email or a malware that somebody assumed was coming from a trusted email. How do you sort of go through your day and try to avoid those sorts of exposures? So I think that the ship-owning community is doing a great job and to try to implement that into sort of their safety management practices. On the insurance side, I think we've actually come a long way from where we were a year ago as far as the products that are offered. We're seeing more and more bespoke cyber policies that are priced accordingly, that wouldn't sort of come out bankrupting any owner or operator. I think that there's sort of levels of programs that are out there that'll fit the need of the small, medium to larger scale companies. But again, it's sort of that first step of mitigating the loss and the implementations within the companies that you're starting to see now come home to fruition. And I'm sure John can sort of comment from Sealift's perspective on that.
Our biggest question, are we insured or not insured? And God forbid anything happened, that's going to be a hassle to try to determine. With Sealift, we're U.S. flag. Most of our ships are on long-term charter to military Sealift Command, and we feel we have an extra protection there because of certain systems that they put on our ships to protect the cargoes that we're carrying. So we're watching it. And again, we just hope we don't have a claim. From the other side, I can a little story about basically a P&I company. I understand they got cyber attacked, and they actually paid a claim to a wrong party. And they were held liable. They had to repay that claim over again. So from a shore side point of view, I think the P&I companies have to look at their systems also and have that extra level of protection so this does not happen again.
That's never actually happened to, I know of that case, but it's not happily happened to us, although we've had various occasions where, I mean, to be honest, rather suspicious when you look into it. Suspicious emails are sent to members of staff, many of them purporting to come from me, saying, please pay this money immediately into a certain bank account. But anybody who reads them realizes that that can't be me speaking. Hey, Chaz, will you please, da, 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 da. I don't really address my staff in that way. So, you know, you can always tell if you look very closely, but some of them can be very, very, perplexing. And you've got to be consciously aware of that. We had a ransomware attack, actually, the American Club about 6 months ago, which we deflected because we have very, very good systems. That was not, they tried, but they couldn't get in, thank goodness. They tried, but they couldn't get in because our systems are so well protected. But it's a real problem for a lot of people, obviously.
No, it is, and so long as the emails from Joe go, that Joe comes, that's how they come. This is Joe, please help me. And then let's see how many people from the company respond.
Yes, I know, yes, exactly. Very few, it speaks to something.
And then the second wave is, and then the second wave, please transfer some money. But on a more serious note, from a regulatory perspective also, it's interesting that the Coast Guard is in process of also implementing cyber regulation, and there was a statement to that effect of Admiral Thomas a couple of months ago. So watch this space. And in addition to that, in the international arena, IMO actually in its working group is preparing new cyber regulations. So the field is continuing to develop from a legal and regulatory point. I see here that we have 4 minutes left, and I'll open the floor to questions.
With regard to the cyber exclusions that you all just addressed, it would seem to me that so many of these cyber events are by their nature indeterminate in terms of the source. You're not going to be able to tell who's the source, let alone see into the brain of those people to determine their intent, which then would seem to create an insurmountable burden of proof for the policyholder in order to recover. And it would seem to me that that kind of uncertainty is exactly the sort of situation that God intended the insurance industry to address. So it would seem to me that there would arise great pressure in a buyback sense to afford coverage for these gaps that have been created by the various exclusions. Do you not see that? Well,
yes. I mean, I can't speak for hull underwriters, but I think from a P&I club perspective, if there were an incident and it was indeterminate as to what as you say, that what was in the mind of the person who actually created the problem for the ship owner, then clubs would probably deal with that in the ordinary way and give the benefit of the doubt to the owner, quite honestly, in those circumstances. If there were a hint of, well, if it were a war risk, I think people would probably be aware of that in the larger context right from the get-go, quite frankly. But if it were a matter of somebody purporting to act in a terrorist context, then clubs do have a rule saying that what constitutes terrorism in any given case, as far as the exclusion is concerned, is a matter for the board of directors to determine. And I should imagine that the London Club has a very similar provision in that respect. So there is the ship owners themselves will determine in circumstances where it was sought to actually, or the managers were inclined to apply an exclusion, whether in fact that act was an act of terrorism in that sort of indeterminate case. But in the ordinary way, a cyber event would be covered by a club, I think, and assumed to be either accidental or non-terrorist or non-war, absent any evidence to the contrary.
Yeah, and the beauty of the buyback is you're buying it back within the whole policy that's an extension to the war policy. So to sort of get around that scenario, which is an excellent scenario, is that the buyback would be sort of an all-encompassing buyback. And the real exposure that you have is sort of on your war P&I element is, that's the sort of the gray area. Will the P&I club come in and say this is a war, terrorist, malicious event, or is it sort of a non-malicious event where it is covered? So with the buyback, there is no gray area. It is covered because you're essentially paying for the policy, for the buyback of the policy.
Aren't the shippers going to be looking, in effect, for what amounts to practically an all-risk cyber coverage? I mean, that's the uncertainty that they face, right?
Well, and that's the alternative to the buyback. In the event that the buyback isn't comprehensive enough or it's too expensive, a standalone cyber policy can be purchased. And right now, pricing is pretty competitive. We'll see what happens in a few months, but there's optionality out there right now.
Thank you. Are there any other questions? Yes, please. Mr. Shaw.
The war risk policy kicks in circumstances where it's a malicious event or a terrorist event, more specifically. Why would anyone pay the extra money to buy back the risk that's covered under your war policy?
Because you could have circumstances where it isn't war or terrorism, somebody just acting maliciously, but not for a political motive in the case of terrorism or as a war act.
Thank you. Thank you very much. Thank you for this inquisitive audience. To this inquisitive audience, enjoy the next panel.